It's more than just the everything store. Amazon is a cloud computing titan, an advertising powerhouse, and a global logistics network. But after its massive run, is the stock a buy, a hold, or facing new risks? Today, we're doing a full deep dive on Amazon, breaking down its key businesses, financial health, future outlook, and the critical risks every investor must know. Let's get into the data. First, let's understand where Amazon's money comes from. It's no longer just retail. Their business rests on three core pillars. Pillar 1, North America and international commerce. This is the classic Amazon, online and physical store sales, third-party seller services, and subscriptions like Prime. Combined, these segments bring in about 80 to 85% of total revenue, but they are the lower margin part of the empire. Pillar 2, Amazon Web Services. This is the profit engine. As the world's leading cloud provider, AWS contributes roughly 15 to 17% of total revenue, but a staggering about 70% of the company's operating income. Its growth and margins are critical to watch. Pillar 3, advertising. Often called the other cash cow, Amazon's ads business is growing rapidly, leveraging its massive shopping data. It now brings in over $45 billion annually, or about 7 to 9% of revenue, with very high margins. It's becoming a third major profit center. Now, let's crack open the financials from the latest annual and quarterly reports. Profit and loss. For 2023, Amazon reported revenue of $574.8 billion, with a net income of $30.4 billion, a massive turnaround from 2022's loss. The key story is margin expansion. Margins are king. The operating margin jumped to 6.4%, up from 2.4% the prior year. The net margin landed at 5.3%. This improvement is driven by cost cutting, regionalization in logistics, and the high margin mix of AWS and ads. Cash flow and balance sheet. Operating cash flow was a robust $84.9 billion, up 82%. The balance sheet is strong, with $73.4 billion in cash and equivalents and manageable debt. This firepower fuels investments and buybacks. Valuation check. With the stock's run-up, valuation is a hot topic. As of our recording, Amazon trades at a trailing P/E of around 52 times. That seems high, but the forward P/E is closer to 32 times, reflecting expected earnings growth. The premium is for its future, not its past. So, what's fueling the next leg of growth? Analysts see several key catalysts. 1. AWS reacceleration. Cloud spending is rebounding with the AI boom. Amazon's custom AI chips and Bedrock service position it to capture significant AI infrastructure spend. 2. Retail margin expansion. Continued efficiencies in fulfillment network, more third-party seller volume, and the growth of high-margin advertising within retail. 3. International profitability. Long a loss maker, international operations are being streamlined and could turn into a meaningful contributor. 4. New frontiers. Ventures like Kuiper, healthcare, and autonomous logistics offer optionality for the long term. No investment is without risk. For Amazon, the main concerns are 1. Regulatory and antitrust scrutiny. In the US, EU, and UK, Amazon faces ongoing lawsuits and investigations over market dominance, which could lead to fines, forced restructuring, or operational constraints. 2. Intense competition. In cloud, it battles Microsoft Azure and Google Cloud, especially in AI. In retail, it fights off Shine, Temu, and Walmart. In ads, it faces Google and Meta. 3. Economic sensitivity. While resilient, a deep consumer recession could still hit retail and ad spending. AWS growth is tied to corporate IT budgets. 4. Execution risk. The sheer scale and complexity of Amazon's operations mean missteps in massive investments could be costly. Recently, all eyes are on AI and Andy Jassy's cost discipline. The Q1 2024 earnings beat estimates, driven again by AWS and ads. The launch of Rufus and major AI chip developments are constant headlines. The bottom line, Amazon has successfully transformed from a low-margin retailer into a diversified tech giant with multiple high-margin engines. The financials are the strongest they've been in years. The investment case hinges on believing AWS will win in AI, and that management can continue expanding retail margins. At its current premium valuation, the stock price is in a lot of success, leaving little room for error. It's a conviction hold for growth investors, but new buyers might wait for a market pullback. What's your take on Amazon? A buy, sell, or hold? Let us know in the comments below. Don't forget to like and subscribe for more deep dives. Thanks for watching, and see you in the next one.